Good afternoon. I'm David Mandy, president of O&M Partners in New York, and I want to welcome everyone to Healy Gold Royalties Town Hall Call. Healy trades on the TSX Venture under ELY, also has an OTC listing, which is ELYGF. For you that are new to this broadcast, O&M is marketing and communications company. We're strictly communications, non-deal. Our focus is bringing public companies, managements of public companies, and non-deal investors together in real time. The information presented is all public. We're hoping context and perhaps bringing information to light that you didn't know will help you make a better informed investment decision. We want to answer everyone's questions, so if you have a question, please feel free to use the question pane on GoToWebinar or just email us. We'll only have time to answer some of the questions, but be reassured your questions will be answered by management in a reasonable amount of time after the conclusion of the call. Before we turn to our host, Trey Wasser, we're going to start with a presentation, special guest presentation from Jeb Hanwerger, who's the editor of goldstocktrades.com. He's a highly sought after stock analyst and best-selling syndicated writer. Jeb is a real renaissance man or polymath. He's got a strong background in stock market history, investment psychology, geopolitics, mining engineering, economics. He covers the waterfront, and he uses both fundamental and technical analysis. He studies price volume action. He understands long-term macroeconomic trends, and focuses on how this analysis on how it relates to precious metals and the rare earth sector. And without any further ado, it's a real pleasure to turn the call over to Jeb.
Hello, everyone, and all the viewers to this O&M webcast. And thank you for having me and for inviting me on. This is a very challenging time for a lot of investors. We've seen a significant crash and entering a bear market for the first time in many, many years. For many investors, it's a very difficult time. A bear market, a lot of stocks are down some 50%. For people that have been following gold stock trades and have been following the precious metals, many investors that have studied asset bubbles, the madness and the confusion of crowds, knows that over the past decade, we've seen a huge rise in the equity markets after the 2008 credit crisis. We've seen a huge asset inflation from 2009 from the bottom until recently. Up until even 6 months ago, I highlighted to my readers and my subscribers and the people that follow me on social media that we were in a bubble. There were many things headlines that showed from mainstream media that they couldn't predict anything that could pop this bubble. All the mom and pop investors were getting over levered and using margin to invest in levered S&P products. And what we also noticed was that there was a lot of insider selling from these bigger tech names such as Jeff Bezos and Mark Zuckerberg and Bill, and we saw lots of CEOs that were resigning at the top. So there was lots of signs that there was a bubble. And then we saw at the end of last year, the Fed that was supposed to be raising rates started to lower rates. This was before the coronavirus. And we saw them get involved with the repo market, and we started seeing the yield invert. So there was lots of signs before this coronavirus that this asset bubble was having difficulties to maintain those levels. And now we've seen with this coronavirus and with this huge shutdown of the economy, this has just accelerated that decline. And we've seen now the Fed take unprecedented actions, lower the rates back down to zero, started unlimited QE, and announced this record stimulus, putting money, sending out money to all the American people, like we saw 2000 under Bush and after the tech bubble bursting. But we see that we had the tech bubble burst in 2000. We had the U.S. housing bust in 2008. And so once every 10, and then we had a long time, 10 years of a record bull market. And one of the charts that we sent out is the broadening top bearish megaphone pattern that we sent out back in, I guess, June or summer of 2019. So, you can't pick a top, but, we were maybe 6 months or 7 months ahead of the game. There was a broadening top bearish megaphone pattern that was developing, and very small group of stocks that were leading the way to new highs for the indices that really should have been a warning sign for people to at least get off margin and at least get some be more defensive. And since last summer, we also noticed that gold, which was basing for many years, 7 years, was beginning to break out of that multi-year base. And we saw this last summer, and we've been highlighting this breakout in gold that we saw last summer. We begin to see some of the miners before this coronavirus pick up, yet the move into the miners has not really happened yet. This has come to dismay of many precious metals investors, but it is good for people that may have had exposure to stocks and maybe need to change quickly to get some exposure to gold now and go defensive. There's still time. If you're looking for value in gold, it's very hard to find physical gold right now. The premiums between the physical and the paper are completely divergent, but the way to get discounted gold right now still is in the miners, and especially in the explorers and the developers, which are even further discounted, and the junior explorers are the most discounted and trading at levels not seen, still at gold price at $300, $400 an ounce. So there's still time for investors to build a portfolio of some top-notch explorers and developers. And there's been a huge amount of money that's been moving from the last, I would say, 6 months since that June when I started sending out these charts, with gold breaking out and the stocks beginning to top, long before this coronavirus even anyone knew about this. And now we're seeing, months later, we're seeing inflows of money going from treasuries and stocks into gold ETFs. And we're seeing money being pulled out of the treasury market, the stock market. And finally, we're seeing money pouring into gold, which we haven't seen in many, many years. So this might not be the greatest time for the stock market, but it may be a great time for precious metal. We may be setting up for something that we haven't seen in maybe 40 years, where gold stocks soared and the S&P was flat or declining, like we saw in the 70s or in the early 2000s. After the dot-com, we saw gold move, the gold mining index move, whereas S&P 500 stayed flat. We saw that in the 70s. We saw that in the after the dot-com bubble. We saw that for a little bit after the 2008. From 2009 to 2011, we had a big run up in the gold stocks. And then, if we study the Great Depression, the 1930s, the gold stocks soared, like Homestake Mining, soared in value versus the Dow. And we're beginning to see this Dow gold ratio, which I talked about, eventually going to 2 to 1 or even 1 to 1. People thought it was crazy 6 months ago when I was talking about it, but now we're getting closer and closer to that. What's interesting, we're seeing record high gold prices, and we're seeing record low, 20-year low oil prices. So the gold to oil ratio is at an all-time high. What's that mean is that the miners are going to be generating, once these mines are up and running again after this coronavirus shutdown. And we're beginning to see that China peaked out, Italy may be peaking out, and the rest of the world may start peaking out in the next 2 to 3, 4 weeks. So it's not going to be forever. The mines are going to start up again, but they're going to have a huge gold to oil ratio. Oil's energy, diesel, these things are big costs in mines. This is going to get to the bottom line and generate free cash flow. Hopefully the miners will use that cash flow to invest in resource growth and discoveries, high grade discoveries, which we're focused on. So the gold to oil ratio has skyrocketed, and we're dealing with huge, massive unemployment numbers from this coronavirus. One area where it's going to have an impact, on real estate, the commercial mortgage market, commercial properties might be in danger. The real estate market is still very overvalued. The stock market's still overvalued. I don't think that this is going to be so quick. I think there's been issues, systemic issues before coronavirus, and this is just going to exacerbate the unlimited QE, the zero negative interest rates, and the stimulus and the deficits. Just going to exacerbate a gold market that was already breaking out and a cycle that was already beginning to go from stocks and bonds. So again, thank you so much for being here today, for letting me speak about the market. The most important thing is to stay healthy and stay safe, and also financially, protect yourself. Make sure you have a hedge against all this money printing and the financial risks that could be happening over the next few months. And you can always find me on goldstocktrades.com. You can find me on LinkedIn, Jeb Handwerker. You can also find me on Twitter at goldstocktrades, my username. And you can always private message me or email me at jeb@goldstocktrades.com. And again, I appreciate O&M to facilitate a discussion like this, digitally. This is the future, a way investors can connect, and I'm so happy to be involved and to give an introduction before this next great gold company starts just telling us about what they've done so successfully over the past year. Thank you so much for having me.
Thank you, Jeb. Greatly appreciated. Thanks for your comments. Now we'll turn to our host, Trey Wasser. Trey's president, he's chief executive officer, and he is director of Healy Gold Royalties. A math major who started out on Wall Street in the bond business, and he was also an investment banker. I'm just going to focus on the last 10 years, which he spent, which is probably now 12 years, but he spent in the mining business. And for the last 8 years, building Healy. The thing about Trey is in 10 years, he's done what a lot of people in their whole career never achieved. He started out at a traditional exploration development company, fully permitted his first project, Mount Hamilton. He took it all the way to bankable feasibility study and then sold the project to Waterton Global, which is just, for the first time out, that's pretty impressive. And at that point, he put together a royalty company. He also, in that way, differentiated himself because he did it in a different way. He took a database of Nevada properties, where, as we know, most greatest prospective geology in precious metals in the world, and that had not been explored. And rather than JV the properties, which is a normal way to do it, particularly with the majors, he sold the properties and retained a royalty. And he's been very successful at it, and it's a real pleasure working for Trey. Also, Joanne Jobin, who is the IR, handles the communications, whom we work with for a long time. So, pleasure to turn the call over to Trey.
Well, good afternoon, everybody. As Jeb said, it's crazy times out there, and what we want to start doing with these calls is keep saving a lot more time at the end for Q&A, because a lot of things going on, and have comments on the royalty market, the gold market in general, and specific questions to Healy. So I'm going to jump through things pretty fast, and if there's some slides that have specific questions on, you can ask those at the end. So we'll be making some forward-looking statements here, so we're always obligated to put this page up here. Start out with just a quick snapshot. We've had a lot of warrant exercises lately, so our share count has grown to about 120 million shares, fully diluted just under 150, and which gives us a fully diluted market cap of just under $100 million. We've got about just under $10 million unrestricted cash and investments, so over 10 million in working capital. And the debt that we have is 6 million is on the line of credit that we've got from Eric Sprott and used for a couple of recent transactions, and then a small amount on some transactions that we did earlier in the year. You know, anybody who's technically oriented could look at our chart and see, you know, probably one of the better charts you'll see in the marketplace in general, although, you know, it's probably true of the royalty business in general here, charts like this. Eric Sprott is currently our largest shareholder. Rick Rule is also involved with the company. And so that's a quick overview there. I'm not going to spend a lot of time on these slides about just the royalty business, but just to sum it up is that the gold royalty equities is absolutely the best way to get leverage to physical gold, and in a much lower risk, high reward type of situation. And we'll go over that, but the main thing is operating costs, especially in these tough times, is that you know, we are seeing some mine closures, and while that does affect royalty companies because you're not getting paid a royalty when the mine is stopped, but the royalty companies, we have very low overhead. You know, we're not having to pay to keep those mines on care and maintenance. We're not having to pay to keep the miners on staff, or, you know, keeping them paid, because you can't let them get away. There's a shortage of miners. But this is a slide you can study, and if you have questions, the slide kind of speaks for itself. This next slide really it just points this out. The red is Franco-Nevada, the green is Microsoft, and the blue is the S&P. That's a 10-year chart, and basically, you know, it gives you an idea of what a great investment that the largest gold royalty company has been over the last 10 years. In general, you know, you have three levels. The major companies, when you talk about gold royalties, we you know, there's not a lot of specifically gold royalty companies or precious metal royalty companies, but a few in that major category, which command, you know, big multiples on their net asset value and cash flow, and then a few in the mid-tier group, and again, just a handful down in the junior category where you would put where Healy is now at, as I said, just under 100 million market cap. This is a very interesting slide, I think, too, also in looking at the royalty space. And these are companies. I'll point to the two bottom ones: Franco-Nevada, the largest company; Royal Gold, the second or third largest royalty company. And these go back to their first 3 to 4 years in existence. And it just shows you that royalty companies, when they are at that early stage, where Healy Gold is today, have incredible leverage and historically some great returns in the first few years in existence. The valuation model on Healy, we compare ourselves to a couple of other junior royalty companies, Metalla and Abitibi, both great companies. You know, a little bit different on the business model, but you know, you can just see that at the bottom, as far as number of royalties, number of producing royalties, even in the revenue area, and that we have built up a portfolio in the last 3 years that compares very well with these companies. Yet, you know, we're selling at anywhere from a half to even 35–40% of Metalla's market cap. We've built a portfolio here 2 ways. We have done, as David said, we do staking and property generation. We sell those properties and retain royalties. But what has really changed for Healy, and where we've really taken off in the last year, is as we've started to purchase royalties. And we're purchasing them from third parties. We're not actually out financing mine construction and that type of thing like the larger royalty companies do, but buying existing royalties. We're mainly focused in Nevada. We know Nevada as well as just about anybody in the business. And you can see that we have 2 sources of revenue. One is our sales revenue. When we sell properties, we generally do those over a 4-year contract. Sometimes we sell them for all cash, but probably 80% are on a 4-year contract. So you can see on the blue there, you know, we have looking at a little over $2 million in sales revenue on the books. These are existing contracts. This isn't a projection here. Existing contracts, and that escalates and kind of holds in the $2 to $3 million a year from our sale portfolio. What that does is that more than covers our overhead. And on the royalty side, because we are generating royalties through our sale portfolio, is where we differentiate ourselves from our competitors. Is we do not purchase, we don't spend our shareholders' money and equity on exploration royalties. We focus on producing or near-term producing royalties on the purchase side, and then we generate the royalties through property sales on the exploration side. So as you can see with the purchases we've made in the last 18 months, we have a great looking profile as far as revenue growth over the next few years. As I said, this is this 2-pronged approach where we're both buying producing royalties. When we buy those royalties, we're generally looking for about a 20% after-tax IRR. And one of the reasons, you know, I just point to that very last bullet point on the top there. For us, we're now grown to the point where at $100 million market cap, we're doing deals in the $5 to $10 million range, and every one of those really moves the needle for us. You know, we're got the advantage of working a bit under the radar of the larger companies, but on transactions that really do add to our growth. And of course that royalty generation program both is generating revenue and some very interesting exploration and development royalties. I'm going to talk just quickly about, again, a couple of our recent transactions. This is one we're very excited about. We're working to get this closed here in the next 30 days. Purchase of a company in Nevada that's been around since the 80s, VEK Associates. With it comes a 50% share in some just very exciting royalties at the Gold Strike mine, the Ren deposit. This is the mine that basically made Franco-Nevada. Gold Strike has produced over 55 million ounces, and we're able to pick up a royalty in this deal that's right in the line of the current development. We also in that package got a royalty on SSR Mining's Marigold mine, another mine that's been around for years producing, and we have 3 different deposits which are in their current mine plan to go into production, and these different deposits between 2022 and 2028. We also in this package got some exploration properties at the Pinson mine, the Lone Tree mine, and near the Carlin Trend mine. I'm going to show you here the breakdown on this Ren and the deal. We paid $5 million cash to buy out the shareholders of VEK Associates, plus 2 million warrants at 62 cents. With the portfolio generates about $352,000 a year in advance royalty payments, but this Ren deposit, I mean, if you look at this map here, that Gold Strike complex, the black pit there, and kind of in the middle of the page towards the bottom, produced over 30 million ounces. Up along the Post Fault, going up towards our Ren property, produced over 13 million ounces. The Ren property has outlined there in red about 2 million ounces, but very difficult exploration there. This is about 3,000 feet deep, and difficult drilling. So what is going on there right now is Nevada Gold Mines, the JV, they are drifting in from the south and also drifting in at the north end of the property over from South Arturo, and going to connect that and explore that underground. We know we've got a little over 2 million ounces there, but we think this could get much, much bigger. This is the map of the Marigold, and you can see the map on the right-hand side there shows the 2 deposits that are in the mine plan. In fact, this map came right out of their 43-101 mine plan development for this is for 2022, and then as you can see, we've got claims where they're exploring at the north. Those deposits at the very north claims there are already starting to work their way onto our ground. The other recent acquisition we made, another one that really moved the needle for us, is the Jeri Canyon. This is a 0.5% NSR. It'll produce today's gold prices, and it'll produce about $1.5 million a year for us. And we did this with Eric Sprott in an all-stock deal. This slide kind of sums up where we, how well we have done in the last 3 years of putting deals together in Nevada. These are our third-party partners, and we literally are working with just almost everyone in Nevada that's producing and or the high-quality explorers. And there's just really only a couple of companies out there that we'd like to add to this slide, but we've been very successful. What this slide points to is the fact that, one, the companies love our model of 100% ownership for them with a royalty interest, as opposed to getting into a JV with a junior partner. So it speaks to the model as well as the quality of our projects that we're generating. The talk about a little bit about some of our others. Another very exciting project for us property is the Fenelon mine at Wallbridge, where we have a 2% NSR. They've just in drilling in this last year, they've outlined already in the last 12 months about 2.5 million ounces. Underground infrastructure is already there. They're in the process of getting the small miners permit to go in and start producing, as well as do more underground exploration. The Lincoln Hill mine with Cortes, this is at their Rochester project. And, I mentioned the Jeri Canyon. We also have a production royalty on the Jeri Canyon mill, and 0.75% on the Isabella Pearl mine. So these were all projects, well, except for the Jeri Canyon 0.5% royalty, these are the royalties we purchased last year. And our goal going into this year was to purchase 4 more, but with this VEK transaction and the Jeri Canyon NSR, we've already exceeded our goal for this year. The other one that I didn't talk about here is the Regent Hill. That's one we just closed recently. That's a 50% net profit interest on a producing mine operated by a private company, Rawhide Mining, and that will start producing for us later this year. I'm going to skip through these and let everybody look. This is a breakdown of the Wallbridge, just some incredible drill results. They were able to drill this out and show these kind of start to outline 2.5 million ounces here. And they were able to do that because they put in this infrastructure that's inset there at the top, down 6 levels, so that they could do the underground drilling. And we're just very excited about the potential at Fenelon. And I might point out that with the junior royalty companies at the size that we are, it only takes one royalty really to really launch a company. With Royal Gold, they were a 20-cent stock in the early 90s, and then the pipeline deposit got discovered, and they took off from there. Franco-Nevada is the same thing. We have kind of ridden on the coattails here this year with our stock price going up and our market valuation on the Fenelon. But today, with the Ren deposit, we now have 2 that have the chance to be real company makers for us. This map shows the Lincoln Hill deposit, where Cortes is building. They're just permitting a 300 million ton leach pad. That's the arrow pointing to the stage 6 leach pad. And the ore from Lincoln Hill is 4 times the grade of the Rochester on the gold side. So we expect that by 2023, they'll be putting that ore on the new pad. One other thing to point out that we do that's different is we do multiple deals with companies. Once we get involved with an asset, we tend to find as many opportunities as we can. So while we have a producing royalty at Isabella Pearl, we have actually a total of 5 royalties in between the exploration ground at Isabella and some satellite projects that we've sold. to gold resource. We have 2 at Fiore Gold's Gold Rock project, which is fully permitted. We have 4 royalties on 6 different properties in McEwen's Gold Bar mine, and then properties at Turquoise Ridge, South Arturo, Delamar, and Allegiance East Side. So we tend to focus on projects that are at or near producing mines, or in situations where there's already a feasibility study. And so that this slide right here represents about 15 of our what we would call exploration or development royalties. Not necessarily near production yet, but they're at or near producing mines, and they don't need to get big enough to support building a mine. The mine is already there. And this is something that's we think is very smart strategy, because we will see many of our royalties producing. Not all will be huge deposits, but they don't have to get big, and they will go into production and extend the mine life of these existing mines. So here in that is the Isabella Pearl. You can see where the deposit is down at the very bottom on this slide. That's where we have the 3/4% royalty. All of that blue exploration ground, we sold them and retained a 2.5% royalty. So literally all the near exploration ground at Isabella is on our 2.5% claims. Then we also sold them 3 satellite projects at Mina Gold, County Line, and these have existing resources on them. They'll either get big enough to be standalone satellite mines, or they'll be deposits where they'll haul the ore over to Isabella. Same thing, this is a picture of the gold bar complex of McEwen's, and just give you an idea of how, when we get involved with the project and we like the project and we like the operator, we continue to find situations and seek out situations to leverage with more properties, multiple properties at an existing mine. This slide just gives you an idea of where we are in Nevada, which is just pretty much everywhere. And continuing today, if you look at our whole portfolio, we have 37 deeded royalties. We have about 6 more royalties that are on leased properties. We have 22 properties in our sale portfolio that are they're being paid to purchase the properties. We are being paid, and we'll retain a royalty on those. And then we have 20, actually it's probably grown to closer to 30 properties available for sale. So we've got great inventory and a long runway for growth here. I talked just a little bit about management. Dave touched on it, about my background on the finance side. My partner, Jerry Bachman, who runs our Nevada subsidiary and royalty company, who's built royalty companies and sold them in the past, does all the field work, the property generation, the property sales. And again, pointing out in the royalty business, keeping that overhead low is a key. Jeri and I are literally the only 2 full-time employees at the company. Our CFO works at our accounting office, our accountant's office, and works for other companies. Steve Kenwood is our corporate secretary, and QP, same thing there. Joanne, of course, she actually should be considered full-time because of how hard she works, but she does have a few other clients. So, and then rounding out with our board of directors is some independent guys. Point out that Bill Sheriff also has over 30 years of experience in prospecting in the United States, and especially in Nevada. So basically, right, I won't go through this whole thing. We achieved all our goals that we had for last year. We've already reached most of our goals for this year. We look for things to continue to expand. And that really sums it up. I mean, where we are is, the upside from here. We're still feel we're undervalued in the junior royalty space, even though we've been, building an outstanding portfolio that'll stand up against the other junior companies. We're still looking for a re-rating to be trading closer to their stock prices. We're very aggressive in growing our portfolio, both through property sales and royalty purchases. We have 2, 3, possibly 4 really key royalties now in Fenelon, Wren, Marigold, and Jeri Canyon. And then lastly, gold price leverage. The beauty of the royalty company is, like I said, our expenses don't go up. Don't go up if a mine closes. When the price of gold goes up, our revenues go up without our costs going up. And I also might point out that at these higher gold prices and in this difficult economic environment, we are really seeing a lot of opportunities. People who we talked to about buying their royalties 6, 12, 18 months ago are coming back to us today saying, well, my stock portfolio is not what it once was, and I'm a little nervous. You still want to buy that royalty from me. So a lot of opportunities in this market. And with that, I'll open it up to questions.
Thanks, buddy. I really appreciate it. Great, very thorough as always. Well done, Trey. We'll start with Carl Dawson. Carl, question today for Trey.
Yes, absolutely. Recently, Sandstorm Gold Royalties withdrew its guidance because of some mine closures due to the coronavirus situation, and I imagine that there will be an impact on Healy's projected royalty income because of mine closures or delays in ramping up a new mine. Obviously, that's just a temporary issue, but I'd be curious to know what impact you think that will have.
Well, first of all, all of our producing assets are in Nevada, and Nevada has not closed down. Mining is considered essential in Nevada. I'm not saying we won't see some closures, but so far we haven't been affected that way. And again, we're more than if we do see that, certainly it will affect revenue, those closures. But remember, again, the beauty of the royalty business is we don't have the expenses. We don't have to pay those miners while the mine shut down. We don't have the cost of care and maintenance. We might have a drop off in our revenue, but our expenses actually, stay the same. Or in fact, in this environment, we've been cutting back expenses, especially on the marketing side. I mean, I was supposed to be in Europe this week, so not as much travel and more efficiently working with on calls like this.
Great, thank you very much.
Thank you, Carl. Always great to have you on the call. David Green's with us. David, question today? You're unmuted, David. Okay, we'll come back to David and turn to Doug Loud.
That was very interesting, and you answered my question about the mine closure possibility. And you're safe from all the permitting issues. Your mines are already in the works unless they decide to expand.
Well, again, we're not responsible for the permitting side. That's something that the companies do, and like I said, we're we're pretty much focused on our royalty purchases on things that are already permitted and producing, or permitted and in the final feasibility stages, and that type of thing. So look, I mean, I think that there's no question, and don't want to downplay it, that this is an incredibly unpredictable economic times. But as Jeb pointed out, governments around the world aren't going to hesitate to print money and throw it at this problem. So
Right.
we're in a good environment for gold, and you know, again, our expenses don't include any of that permitting. I mean, might some things be slowed down? Absolutely, but we'll be weathering the storm pretty well.
Do you receive your royalties in gold itself or in money?
We receive ours at this point all in money. We do have some royalties that have a pay-in-kind option, but those are not producing at this point. So, you know, and because we're so aggressive and seeing so many opportunities to reinvest, you know, we're really not in a position to sit on the metal anyway. I mean, we, as quick as we can raise money or see cash flow, we've got some excellent opportunities to reinvest that money.
Great. Thank you very much. Very interesting.
Thank you, Doug. We'll turn to Heinz Thoma. Heinz always has great questions. Question today, Heinz?
I'm doing fine. Trey, thank you very much. Great presentation. I've been watching your company for over a year and a half. I'm very happy as a shareholder. If I remember correctly, your projected revenues have more than doubled over the time with the transactions you have done. Is that about correct?
I'm not sure the timetable you're looking at, but
so
going back to you know, our revenue slide, which I'll jump back to just real quickly. You know, we finished out 2019 with just under 4 million in revenue, and you know, this year we're looking at projecting just under 6, so growing to over 8 in 2021. And you know, depending on the market, we've been very conservative. We've got a few projects in there like Gold Rock and a couple of others that we have not modeled in as revenue yet, but we think that that's the beauty of our portfolio. So as I point this out to everybody here, is when you're doing your due diligence on a company like Healy, you don't have to just look at our website and our presentation. You can actually go and see what these companies are saying about their projects and really drill down on with Wallbridge, with Gold Resource, you know, find out exactly what they're doing. So it, you know, we're on a great path, and you know, we have not we haven't modeled everything in yet, trying to be a bit conservative, but you know, the revenue growth profile is excellent.
That help you, Heinz?
yes, thank you.
Okay, thanks for your question. We're going to turn to our earlier presenter, Jeb Hanwinger. Jeb, question today, my friend.
Jeb, can you unmute yourself?
Yes, there I am. Thank you, Trey, for the presentation. It's really remarkable, the companies and the projects that you're working on. Some of them are some of the most exciting projects, like Fenelon, and you mentioned the Delamar project in Idaho, which got a huge investment, I think, from a major core. Could you highlight maybe one or two projects that are for sale, like your top projects for sale to a junior miner, and And what are you looking for, again, in selling, in buying a royalty from a junior miner? So maybe you could give like one of your top projects that are up, that's up, that, or, you know, that you might have in the pipeline.
Okay, yeah, let's use an example of as we've grown here, and this is where, you know, I go back to that slide of Royal Gold and Franco Nevada up 3,500% is, you know, last year we were looking at deals both to purchase royalties and on the property side, around $1 million plus or minus dollar deals, because we only had a $15 million market cap. You know, today at 100, we're able to look at bigger deals, and that has allowed us to get into, said on the producing side, which is where we purchased royalties, into some bigger transactions like the VEK, but also on the sales side. So we just announced, well, in fact, we'll be closing it today or tomorrow. We announced that we had purchased some key 73 patented claims in the Tonopah district, and that those matched up to contiguous to some patented and unpatented claims we already had. We had those optioned out to Coeur, and you know, in their haste to drop all their exploration projects last year, they gave that back. So we were able to purchase these 73 claims for $650,000 and match them up with our claims, consolidate the whole district there, and we've sold it to BlackRock for $3 million over 4 years. So and we'll keep a 3% royalty on that. So that's
BlackRock Gold. BlackRock Gold.
BlackRock Gold, yes.
So this is, you have a lot of exposure to silver as well. That's a silver, wasn't that a silver district?
Yes, Tonopah it's the Silver Queen or Queen of the, I can't remember what they called it, but it was actually gold and silver. But I'll give you an idea that very little, that Coeur did do a drill program there, and they had one hole that hit 20 ounces of silver and about a half an ounce of gold over about 5-6, just under 2 meters. That hole was never followed up on. So, you know, they just basically cut back all their exploration properties last year. And so we're excited to have the BlackRock guys come in there. Very smart guys. BlackRock is Bill Howell from Rye Patch, a lot of experience in Nevada.
He was with Placer Dome, right? He was with Placer Dome, Bill Howell, right?
Yes, that's correct. So that gives you an idea of how we're upgrading across the board, not just on our royalty purchases, but on our property sales. And you know, we're very good at consolidating these old districts that have had claim issues, you know, fragmentation of ownership on claims, and that haven't seen modern exploration. We've been very good about putting those district plays back together.
Yeah.
Thanks for your questions, Jeb. We're going to turn to our friend Jeffrey Masseri. Jeff.
Hi, great presentation and great history. You've done extremely well. I just have one question, and that is for Gold Bar. I understand there are several properties there. What are your different royalties on each different property?
Oh, let me jump ahead to that slide. It might be helpful looking at it here. The map on the left on this slide is from their website, and you can see there they're making a big play here on what's called the Cortes Fault.
Right.
And that's running all the way down from the 4 Mile Gold Rush property barracks down through their Hollister property and then down onto Gold Bar. Now, the property we just sold them, that'd be over to on the left-hand side of the map here, you can clearly see the fault coming down through there. It's quite pronounced. So on that property, we have a 2% royalty. The property we announced yesterday that we had closed, which were the JAM claims and the HNT claims, that's a 2% royalty. The property in blue there, the Schoonover, that is just exploration ground. That's a 1% royalty. And then a 2% royalty on the Gold Canyon project, which they picked up from the option on that from Fremont. And that's actually one of the original pits that was in the, when that was mined by Atlas Gold. So that's kind of the breakdown there. You know, we know we've got resources at Gold Canyon. The HNT claims has a small, maybe 50,000 ounce resource on it with the potential to get bigger. Gold Bar over there on the fault has about 180,000 ounces historic. But on both that JAM, the JAM claims there, which is on what they call the wall fault, that's where they're doing some deep drilling, and they'll also be doing some deep drilling at Gold Bar on that Cortes Fault, and so looking for lower plate rocks and large deposits, which is something Rob and his team really understand.
Mm-hmm. Well, most of my questions were answered, but I'd like to know, why do those properties in blue get a lower royalty since they're further back in the development process than the rest of them?
Look, these are a series of transactions. Starting with Gold Canyon, we staked that property, sold it to Fremont on an option, and Fremont picked it up. Gold Bar, we sold, we had option to Fremont. They gave it back to us. We immediately sold that to them. The Schoonover properties there, the 1% in blue, we picked those up for $25,000 from an old prospector. So that was just the royalty that was on it. The HNT claims and the JAM claims that we just closed on with the private party, same thing. Those are existing properties. Those are leases on the JAM and the HNT. And so, you know, we've the only ones of those two, we didn't create those royalties. They just were already in existence.
Okay, thank you very much indeed.
Thanks, Jeff. We're going to turn to John Burke. John, questions today?
Yes. Hi, Trey. How are you?
Good, John.
Good presentation. A couple questions on the VEK property.
Mm-hmm.
Are the numbers from that modeled into your projections, since it's so new?
I have modeled some of that in. I've modeled in a bit for Marigold, since we know we don't really know the amount. So I think I was conservative on that, thinking maybe 50,000 ounces a year. But we know that that's in the mine plan starting in 2022. So it's a fairly good good projection. On Ren, there's two things with Ren. When we purchased that, I modeled it on 100,000 ounces a year, which again is probably conservative for the way they mine in that area. But it also, over the years, they have paid over $5 million in advanced royalty payments, which of course get credited back. So the REN in my modeling for the purchase, I figured them to start producing in 2024, and it would be mid 2025 at 100,000 ounces a year before they had recouped their advanced royalty payments. And so, you know, but what we're hearing with REN is that they're probably going to be much more aggressive in that. And I mean, they could be producing there much sooner. They have the permit to mine the dry ore at REN. They've done so much pumping down at the the Milky Rodeo and the Banshee that we're told that most of the REN deposit is now dry. So that's permitted. We know that they are currently drifting into there. They're kind of running out of ore at Banshee, and they're excited to get in there and do more underground exploration. I mean, you know, while we have it conservatively in our model, it could accelerate quite a bit and get a lot bigger. I mean, I think I actually, for you people who know about Fenelon and listen to Eric talk about Fenelon, I made a bet with Eric that more gold will come out of REN than comes out of Fenelon. A bet that I don't mind losing or winning.
Thank you.
Thanks, John. Glad to have you on the call. We'll turn to Lincoln. Lincoln Rath.
Thank you. Yes, thank you for the presentation. I have two questions. Now, on slide 9, you showed revenues going from 4 million to 12 million over 3 years between now and 2023. So I have two questions about that. Is the increase is mainly royalties? So do these royalties come mostly from Fenelon, Marigold, and Jarrett? That's my first question. Second is, what do you think is the net present value of these 3 key properties?
You know, I'll answer the first question, or the second question first. Is I don't make those kind of calculations. You know, I work off of a cash flow model in purchasing these things. So you know, but and from size standpoint, it's probably too early to tell. But you know, certainly the potential for Fenelon and REN, Jeri Canyon is maybe one of the best unexplored properties in Nevada. So you know, on the revenue side, what is kind of a breakdown? I have another slide that if I had a little bit of problems with, haven't quite updated it, that actually shows the years and the different revenue sources, the different royalties as they're paying off. But if to just walk you through it, you know, 2021, we're you know, we're looking at Fenelon adding, and of course Jeri Canyon increasing a little bit, and then the other smaller producers. Then 2022, the big increase there is now from Marigold kicking in, and then 2023 is from Lincoln Hill kicking in. And if we had 2024 on here, that's probably about where you would see REN kicking in. Although I think that there's a pretty good chance that REN might kick in closer to, you know, maybe even as early as 2023.
So you limited, or you've identified these 4 key properties. So I assume that gives you a strong degree of confidence about this revenue forecast.
Well, yeah, I mean, I think that it's, we feel like everything, when we're looking to purchase a near-term, a producing royalty, obviously it's easier, but a near-term producing royalty, I want to feel like I have an 80% surety of that that asset is going to be going into production, and then I tend to try and be a little bit more conservative as far as the timing. But if you look at something like Lincoln Hill, there's just no question that they're gonna mine that and throw that on that. That new leach pad is 300 million tons, and like I said, the gold grades, it has the same silver grade as Rochester, which is known more as a silver mine, but it's got 4 times the gold grade. So they'll be pretty anxious to get that on the pad. I would say that I'm looking at like an 80% certainty on the production. Now the years may change a bit. Things may get pushed out here, especially not knowing what's going on with the economy, and if things in general slow down for a longer period of time, then to get through these health issues. But we feel pretty good about these numbers right here.
Thank you. That's quite helpful.
Thank you, Lincoln. We'll turn to Nino. Nino Scalamandra is on the line with us. Nino, question today, my friend. We hear you, Nino. Are you there?
No, Nino.
Oh, that's okay. Let's turn over to Scott first. Scott, or any questions that have come in that you'd like to ask from our audience?
Yeah, I have one that came in that I'd like to ask. I believe it's been touched on, so maybe just a summary on it. But here it is. Could Trey explain his system of prospecting and selection of land claims in Nevada?
Well, yes. I mean, again, what I pointed out there is we tend to focus at or near producing mines. That's where we really think the most potential is. Now, over the years, Jeri has put together quite a database. When Bill came on board, and I don't know. I mean, David summed it up, but let's just look back. I mean, in 2015, we were an exploration and development company. So we started about mid 2016 with one royalty, about 20 properties, and I think maybe 4 or 5 of them were optioned out, but one royalty. So that we've done this, we've built this portfolio, Jeri and I, and of course the whole team, but in just a little over 3 years. When we purchased Bill's properties and Bill came on board, Bill had been acquiring data in Nevada over the years. So we have an extensive database that we use to generate these property ideas. And it's all the old Atlas Gold, the Union Carbide, U.S. Smelting, just a lot of the companies that did a tremendous amount of exploration in the 80s and 90s. And so it's the database. It's kind of our focus on properties. Jeri's been doing this for so long that he knows the properties that if they open up that he is coveting. He's got a list that he works off of his favorites. But then that's that work is then backed up with the database. And of course, the database is also a very, very important part of us working with the quality of companies we're working with and getting those properties sold and back out the door. I mean, they love it when they can come in and see a whole data room on a property. They can do a lot of work and not just starting with boots on the ground, but able to do a lot of work from their office and a lot of modeling work from our database.
Great. And I also have one follow-up question from Jeb, if that's okay.
Sure.
Jeb, you're unmuted. If you could unmute yourself.
Yeah, we noticed some of your peers like Metalla, they got a U.S. listing, and I know that the stock's behaving nicely, and you have a huge Nevada presence, a U.S. presence. Have you, has the company started looking into possibly getting a U.S. listing? And if you could comment if there's good deals that come up in this fire sale or in the market right now, your ability to access cash and capital versus other companies?
Well, I mean, I don't know what other companies are doing. I know that, I haven't, as far as access to capital right now, we're in a pretty good position. Well, we'll be spending a big chunk of that to close the VEK transaction, but we'll still be in good shape and still having the cash flow as well. I certainly wish that the markets would open back up as quickly as possible. I think we're in a position where people really like our story. We're at the right end of the market, being in the royalty business. So when the markets do open up, we'll, we think we'll be able to be one of the first ones to raise more money. And we are seeing opportunities, and certainly our goal when we did the line of credit with Eric Sprott for $6 million, which of course we've drawn down to do the VEK. The idea was to draw on that line of credit, but to have it available so that we could get into bid situations and people could see that we had the money to close the deals, then do a financing kind of on our terms and on our timetable, and pay down that line of credit and reload, be ready to do it again. So, that certainly is a negative in the market right now, and it is happening at a time when we are seeing other opportunities. And and what was the other part of your question, Jeb? It was
about the U.S. listing. I noticed
U.S. listing. Yeah, I'm sorry. Look, if you look at last year at this time, we were a $15 million market cap company, trading about 70,000 shares a day on just the U.S. or just on the TSXV. That's when Rick Rule got involved, right? Well, it was literally right at the first of the year. Today we're trading $300,000 to 1 million shares a day, and certainly 600,000-700,000, and split pretty evenly between both exchanges. So we've done a very good job. I think that was one of our goals, was to get more exposure, get market makers involved in the stock in the U.S. So today, we're a $100 million market cap, and a stock that's trading, it's trading some pretty good volume. So absolutely no question that things like a shelf offering, it would be a next natural step in us growing from a capital structure, and a U.S. listing, the same thing. it worked for Metalla. I never know how to say it. It's harder than, for me, it's harder than Ely. But yes, you know, absolutely. That would, I would look at doing a US listing before I'd even worry about upgrading from the TSXV to the TSX. I think that really it's a bit of an upgrade, but it's not like getting on the US market, and it's not like having you know, a pre-registered shelf offering where you can do you know, you could sell stock to people without legends, and you know, it's just the next natural step for us.
Yeah, the next level would be great for you on the OTC, no question. Okay, we've concluded the questions, Trey, so we're just going to turn it back to you for closing remarks. The call's been very, got a lot of information.
Yeah, look, I mean, we've covered a lot here today. Just let you know that you know, we are available if anybody has follow-up questions, you know, either on the email or even calling in to my office. My number and email is on all our press releases. But I just want to say to everybody, look, let's stay safe out there. Crazy times. This virus thing is it's just kind of unfathomable. So I just want to send out prayers to everybody. If you have anybody in your life that's sick or and suffering from this, but everybody stay safe and know that, you know, we are going to get through this. And on the backside, you know, I hate to use what is a you know, a horrible health issue worldwide, but the way that the governments are dealing with it and printing money. Jeb brought it up. I mean, you about can't buy physical metal these days. I think we're looking at a very positive environment for gold over the next few years, and the royalty business for somebody looking to get into gold and get leverage by being in equities without having to pick out the one, you know, a company that just happens to have that great project. You know, we're in a sweet spot here, and I think Ely's going to be a good investment over the next few years as gold prices increase.
Thanks, Trey. It's been a great presentation. I appreciate everyone being involved today, dialing into the call, and wish you a very pleasant afternoon. Take care.
Thank you.